What's good, everyone? Welcome back to another video. In this live stream, we're just going to be tape reading PM session. I'm looking at XAUUSD and then NASDAQ. While NASDAQ doesn't normally move during Asia session, it doesn't hurt to keep an eye on it because there's always a setup in every pair. So just starting from the higher time frames, we obviously had this weekly 1 week FVG. We had this weekly fair value gap that price ran from here. You can see that on the weekly it was the nearest fair value gap, and after this consolidation in one of our weeks, we finally ran down to it, and upon tapping into it, we ran up nearly from 2606 to 2690. So over 900, like nearly 1,000 pips right there. Yeah, and then diving deeper into the daily time frame, we had this bearish fair value gap which was closed over right here, and upon tapping back into it, same thing, we ran from it. It doesn't look like it tapped in here on XAUUSD, but it did actually tap into it on the futures chart. Right, we have the daily IFVG right here, which was tapped into pretty clearly here, which also tapped into the midpoint of this bullish fair value gap that formed as well. Let me mark out that it's a daily fair value gap. There you go. It's kind of the main things that we're keeping our eyes on. I'm gonna turn down this music. I wasn't actually sure what music I could play on YouTube, so I just searched up some copyright free music. I'm planning on answering some questions on the Instagram, so in the meantime, like as we just watch price develop, I don't like that song. So as we watch price develop here on the lower time frame, I'm going to be answering questions on my Instagram page. If you want to ask any questions, let me add an anchored text that how could I ever close my eyes and stay silent since they try to take me down with their violence. So when I see my people fight off the evil, just know this ain't new. A picture can be framed, but every eye will see a different view. So when I hear the chants, when I hear the screams, when I see the horrible scenes, when I see the horrid things coming from human beings, I pray one day a new way will take over. What it's like to breathe life in a coma. We're so blind to the pain of the other. We must see beyond me in the struggle. Break down my walls, but I will rise again, 'cause I stand tall in my. So whenever you're analyzing a pair specifically for a kill zone, you want to start from the daily time frame or weekly if it exists. Like if I was trading around this range, then that would be like one of the most significant things, because we have a highest time frame confluence, right? We had that weekly and the daily right here, both of these daily ones. In this case, we're pushing all-time highs. We don't have that, right? So you obviously want to start from the 4 hour. If we don't have anything there, like here, I don't see anything of significance. I don't really want to mark out these order blocks. I'm not really going to be expecting price to treat them. We have this 1 hour fair value gap, which is already filled halfway, or like at least a quarter was filled right there, and then it ran off. That's something that I'm going to keep my eye on. We're going to keep an eye on all-time highs right here. And then you just slowly start scaling down. People always ask me what the best time frame is. Well, there really is not a single best time frame. You kind of just want to I think some wordless music would definitely be better. There you go. Okay, so now that we're scaling down to a lower and lower time frame, the next thing that we're keeping our eye on are fair value gaps on the lower time frame, liquidity on the lower time frame. You can see that we didn't really create any significant price action, like there was no significant move in either direction yet, and that's what you want to see. So my model for Asia session comes after some sort of like fake out move, like
quote-unquote fake out move, a move that moves in a singular direction, and then we get the retracement after that move happens, and then you basically trade the inversion for valid gaps or breaker block along that leg that ran in the opposite direction. So that's my model. So I basically sit out of the market until that happens. So in this case, I said that there was no higher time frame confluence, but we do have these kind of order blocks on top of order blocks. This would be a propulsion block, this would also be a propulsion block, and this one would also be a propulsion block. So we are expecting price to develop and just push towards highs here. But like I said, it's not reliable to treat these as valid order blocks or propulsion blocks because price action is kind of just chopping its way up. Like, it's not actually creating any sort of volatility. This is just post-market movement. Post-market close movement is what I wanted to say. So now to scale down to the lower time frame. We kind of just want to keep our eye on this all-time highs up here and the fair value gaps on the lower time frame. So let's see if this becomes an IFEG here. "40 seconds until the close." This big candle right here is the daily candle on the lower time frame. So I just watch it to see how the power of 3 develops within this daily range. We want to see this accumulation, manipulation on both sides of liquidity, and then distribution. So after a move like this, we typically see like a following continuation. This is kind of like the first big move, just like what happened right here. It's like the first big move signaling that there's just going to be some extreme buy side here. So we might not even get a complete pullback into this IFEG, but let's see what happens here. We're inside of a macro right now, 850. You can see that from the start of the macro, we ran down, swept some liquidity right here. Swept this low, and now we just swept the high. So we might get a reversal actually here once the macro closes at 9:10. In the meantime, I'm just gonna mute and make some Instagram videos. Okay, we just swept all-time highs right here. This is an all-time high on gold. We just took it out. We're inside of a macro. Once again, we were just kind of looking at what happened, right? We had an IFEG right here, but we didn't pull back just because of this extreme buy side, right? Once these candles start developing like crazy bullish movement, you don't really want to like fight against it. You don't want to be selling as soon as it taps into a bearish fair value gap. It's just too risky, right? Like, look. Stopped right there, and maybe a lot of people thought that it was going to start selling off, but That's not exactly how the market works. It doesn't treat every bearish fair value gap as a bearish fair value gap if it wants to go higher. But yeah, we did sweep buy side. We might get some sell side once this macro closes, and we might finally pull back into this IFVG. We're just gonna keep our eye on that. So macro closes at 9:10 right here. Once again, if you're new, we do have an Instagram page. That one's a lot bigger. We just started growing this YouTube channel. That's where we post regular content. You can see our payouts, the way that we trade on our funded accounts. Slide up if you haven't already. So I do obviously think that it's going to pull back into this IFVG once this macro closes, and the confirming factor that I would use on a normal day that I'm actually trading would be a fair value gap like this. This is the first fair value gap. Let's get rid of this daily time frame. This is the first fair value gap that formed like most recently, which is going to be our confirming factor once this macro closes and it pulls back a little bit. So what I'd look for is once this macro closes, it actually runs down below the nearest fair value gap. If another one forms up here, then I'll use that one. And then basically like it would be like this small movement down from this fair value gap to this one. But for now, this is just a regular fair value gap. Remember that we are trading around all-time highs. This high right here, let me mark it out so that you guys can actually see it. There you go. So this high right here was the previous all-time high. There you go, macro closed and we got that pullback, just as we expected. Now let's see if it runs down a little bit lower, creates this IFVG, and then uses that to go down to this IFVG that was already created here. I want to see it kind of start to consolidate within this IFVG and then return back to highs. So let's see if we get that here. Someone asked what the indicator for session breaks is called. It's called ICT kill zones. Most of the indicators that are used are going to be labeled under ICT. Just the people that made them are pretty, I don't know, not skilled, but just they make it simple, right? Just like this higher time frame power of 3. It's just really simple. Like this is all you need. Can you take entries when gold is at all-time highs? I don't see why you can't. There's always opportunities. You just don't want to be taking the risk of like taking an entry right here when you just swept all-time highs. That's like taking a buy trade when you just swept liquidity, right? When it sweeps liquidity, it tends to pull back before going higher. However, if you consider that and allow price to develop, like we're about to get an order block here, we might create this IFEG right here and tap into this one down here. At this level, this is a discounted price, and we might continue towards all-time highs once again. But make sure that you're not trading like too risky. You want to be considerate of the fact that, you know, it's going to be a Friday with no news. So this isn't the highest probability day. Like we're already in Friday in like Asian time zone. I'm just tape reading this, watching how it develops, what it treats. Okay, let's see if this order block is respected. So these two bullish candles, once it comes down below it, that's what an order block looks like. And we just tapped into the bottom of this order block. I think just barely tapping this wick. And like I said, we are looking for this to become an inversion fair value gap because obviously price wants to drive a little bit lower into this discounted price right here. So notice how we didn't close down below this fair value gap. I'm not saying that it can't run back down right now because we do have this order block, but the fact that it didn't close right here is kind of an example of like price that you should consider when this happens. When you're looking for some sell side and it doesn't actually close below, this could mean like what just happened, it's a lot more bullish than you expect, right? So what price just did is that it swept previous liquidity inside of this fair value gap, and actually the bodies, they respected it. They stayed within this fair value gap, and it remains as a regular fair value gap. You can see that now that we ran up through this, we're about to target all-time highs again. But now that we ran through this, these two bearish candles now become a bullish order block. So in order for a order block to become high probability, we want to see some sort of gap left between this candle wick high right here and the wick of this candle. So if there's a little gap, we have a fair value gap, and this order block becomes a high probability order block. This would be a pretty good pretty good conditions for an entry, right? Because we got a liquidity sweep, we just respected a fair value gap, we have a order block, and once we create this new fair value gap, then we have a high probability confluence, like 3 confluence trade. We would have order block, fair value gap, liquidity. Alright, so all that we need is this candle to close in 10 seconds and leave the gap in between. Three, two, one. There you go. We got a fair value gap. So this would be our new fair value gap. We want to see it dig into this fair value gap, fill it up a little bit, and then tap into our order block. The order block would be right here. So what an entry would look like, I'm not telling you to get into a trade right here. I'm just telling you that this is kind of like price action developing. This is what a normal 2022 model would look like, right? You take the low of the lowest point of the like candles that made the fair value gap. Remember that a fair value gap consists of 1, 2, 3 candles. You would just take the lowest point and put it as your stop loss. Your entry would be somewhere within the order block and fair value gap, and then your target would just be buy side. So in this case, we are aiming for highs here. If we go for like a 1 to 2 here, this is how our trade would look like. Our entry would be somewhere around here. Let's wait for it to dig a little deeper. Like I said, the confluences for this entry would be the liquidity sweep, this bullish move up, creating this order block and fair value gap in between, right? So we just got tapped in, and now price returned. That was already an instant right there from 2697.2 to 2698 almost. So 10 pips already instantly. Because we don't have a specific like previous target, we don't have any fair value gaps or anything above, it's hard to determine exactly how far price will run from where it just swept. So I mean, in this case, the idea is just to go break even as soon as you can and hold to whatever target you would be happy with. So we can go break even here because we did just sweep the high. Someone asked for an outlook on Euro USD. You do understand that Euro is traded during London session and USD is traded during New York session, which would be the morning. So analyzing it right now during Asia session isn't the best course of action because there's not going to be much volatility in a Euro USD market. The reason why I'm trading gold is because gold is based off of almost every currency. Every currency, especially during like wars and stuff, they end up buying up a lot of gold, and that's why it kind of has volatility during every session, especially with the extreme like buy side that it's been delivering. So pairs that you would want to analyze like during this time in the evening would be JPY pairs, like Japanese yen pairs or Chinese pairs. Well, I mean, it's the same thing, right? Yen, JPY. So pairs like GBP JPY or USD JPY, any of those pairs. Or like me, you can stick to gold. I'm pretty familiar with this pair, and it basically delivers a setup on almost every kill zone, right? We have the New York, Asia, and London. And there's volatility on this pair in every single kill zone. It's about knowing the characteristics and just executing properly on each one. So while you may not see, because my chart is the same, like my projection tool is the same color, but we did actually wick into this midpoint. Like I said, we kind of take the entry from the midpoint once it kind of adds on with the order block. This was a high probability entry because we got a liquidity sweep. We showed signs of bullishness because we didn't close below this fair value gap. We created a new fair value gap right here, and then we tapped into the midpoint, filling it up. Then I just kind of aimed for a 1 to 2 RR with my stop loss below right here, below the lowest point of the 3 candles that formed this new fair value gap. And we nearly got our 2 RR right there from that trade. Like I said, there is no real target here because we don't have anything but all-time highs, right? The new all-time high would have been right there, and we just created a new all-time high. So that's the only thing you really have, is the expectation that price is going to continuously run on all-time highs, and the only thing that can kind of correct price is news, right? And the first news event that we have is next week. Next week on Thursday. So obviously, is this the most prime trading conditions for you? It's not. It's not at all. So this month, especially next week, it's probably going to be really choppy on most pairs. Like Nasdaq's probably going to be pretty choppy. So that's what you should just look out for. You want to trade during high probability days. Like if we look back on the month of September, let's look at this. How do I view the entire week? Not sure what I just did there. Oh, there you go. So look, in September, we had days where Tuesday, Wednesday, Monday, Tuesday, Thursday, Friday all have news. Like in these days, price action typically corrects itself when news events occur, right? When news events happen, it manipulates price. Typically after a bunch of buy-side movement like this, we would correct price action. Like it would run back down during some news event that you shouldn't be trading. And then when it runs down, you now have more confluences to trade with. But because we don't have any news events, like we can't really expect price to be the most tradable. Because we might just continue running on buy side. Running towards all-time highs, running towards all-time highs again. So this is how you tape read price action though. If you're looking for some confluence like this IFVG that I was looking for earlier, and the market disrespects that like confluence and it shows you that it's still bullish, that's when you begin to look for new confluences to form in the opposite direction. And that's what we did here, and that's why we were able to get this little trade towards buy side. No real target. All that we did is drag a 2RR TP. If anyone wants to see what I would look at on Nasdaq here, by the way, a good practice is if you don't have the premium trading view price, normally the futures charts are delayed by 10 minutes until you log in with your futures account. So what you can do is you can analyze the forex pair and then go check what actually happens 10 minutes. Like you analyze the futures pair and then you hop on the forex and see what actually happens in 10 minutes. It's like a way of backtesting. So here on Nasdaq, we have a 4-hour fair value gap. This is what I was watching. We are running from a weekly fair value gap, and then we kind of pulled back into the next confluence. And kind of like what I just showed you on the 1 minute time frame, it's the same stuff, in a sense, right? You get the liquidity sweep while you're inside of a fair value gap. You get a liquidity sweep. Then as price starts running up, order block gets created, right? These two bearish candles. That's an order block. order block, and then a new fair value gap forms. You run from a higher time frame fair value gap, and then you use the lower time frame fair value gaps to support your entry, right? So here we have a 4-hour fair value gap, and you basically run from a weekly fair value gap after a liquidity sweep into another fair value gap. And we just got a pretty deep sweep of liquidity here. We got an institutional order flow entry drill on this lower fair value gap right here. A lot of people might have missed that one, but you can see that we filled it up completely and we returned into this. So that's another kind of sign of bullishness. And while the Forex one is running from a weekly inversion fair value gap, on the futures chart we actually are still within it. So let's hop on that weekly. You can see that we're still within this. And I was kind of anticipating price to run back up here and close somewhere above this weekly fair value gap to create the IFEG. So I'm just hoping we get that. That's my reasoning for the buy side. Similar to what's going on right here, right? We closed above, tapped back in, and we're pulling back up. Want to see the same thing happen on futures. And we're just expecting this to kind of turn bullish at least. Okay, let's see what happens during the next macro. 9:30, we got about 20 more minutes. Somebody said, how do you understand that something is extremely bullish or like powerful on bullish side? So a lot of things go into that. But one of those things that I was showing in my Discord, let's see, I'm going to have to scroll up a good amount. Or I can go into one of the weekly analysis. Let's see, August week 4. My internet's being a little slow, but what I'm trying to show you is this seasonal tendency chart that I have. And basically the previous seasonal tendency for like the last 10-15 years on gold, the month of September tends to be very bearish, right? So this month of September right here tends to be very bearish. And these months, they were following their seasonal tendency like to the dot. Like June was a little bit bearish and we got this like doji right there, but still it wasn't a bullish candle, right? These 2 months followed their seasonal tendency, and then we have September, which we expected to be bearish. And the fact that a seasonal month that was supposed to be bearish was disrespected, this means that we are extremely bullish. And following that, what we got on the weekly time frame was this fair value gap, right? The first week of October, we ran into this fair value gap. that kind of like proved to me that we are going to continue going towards buy side, because first of all, we disrespected a previously bearish month, and now we finally tap into a weekly fair value gap. So this month is also likely to continue going high because we disrespected a bearish seasonal month. That's what kind of shows me that we're bullish. And then what just supports that is all the confluences on the lower time frame. Right? Then you scale down and see what price action does. Okay, let's look for it to pull back a little bit into this fair value gap. So this is the most recent fair value gap that we have right now, which has yet to be tapped into. If we form another one right here, then that would be the next one. Like, it's crazy movement. And this is also supported by a lot of like war events. Whenever there's news of war, gold instantly skyrockets like crazy. And this is like an example of what happens in a situation like that. We just get some extreme buy side. Like, there's no news or anything right now. Let's actually check Euro news, because sometimes Euro news affects it. So we got Euro, JPY, because we're obviously trading Asia session. And we're inside of Thursday, or technically it's approaching Friday. Yeah, there's nothing. Maybe some orange folder news. Thursday, nothing. Yeah, so there's no economic events that are supporting this buy side. It's kind of just gold and its seasonal tendency. Okay, this would be the newest, most recent fair value gap. This is how you kind of continue with the extreme buy side. You just look on the lower time frame, the nearest fair value gap that is yet to be ran into, and you watch how price like runs into it, consolidates a little bit, and then you get in your trade. It will typically just continue running towards highs. But like I said, there's no real target, right? You don't have a daily fair value gap up here that you're targeting. You don't have that. So what you can do is just go break even and kind of run towards whatever target you're aiming for. If you're aiming for like $700, that's what you need to get a payout, or that's what you need to pass your account, then that's what you're going to aim for, and you're going to go break even once it runs up, and you allow it to run towards that target. If it stops you out, you wait for the next fair value gap, and then it tends to tap into this. So look, we have a fair value gap right here above, and we have this one below. So this would be a premium fair value gap, and this would be the discount one. Just in the like circumstances that these are the most recent fair value gaps that formed. So price is more likely to draw into this one. This would be the new all-time high. Plus, even if it wanted to run from this one, like, it's not worth the RR that you can get for targeting this liquidity. Like, it's just not worth it. Instead, you wait for the higher probability fair value gap, and then you can target you have a larger range until it hits that TP. Right? From here until this TP, that's 40 pips. Now it's 40 pips. But you don't want to rush it because it can just gap right through. So I also wouldn't use limits. I would just wait for it to fill it up, consolidate, and then we run. We might also get a institutional order flow entry drill, just like what we saw earlier, where it kind of just wicks into it and then continues higher, because you can see that we are respecting this higher fair value gap right here. So what we might see right now is the wick right now of this candle, like tap into it barely and then pull back up. That's another kind of sign of bullish, extreme bullishness. while to many this bullish candle right here may not seem like it does anything really, it's actually pretty significant because this allows these next two candles, like if they form bearish, if this candle becomes bearish and the next one as well, as it taps into this fair value gap, then it comes up above. Because of this bullish candle, these two bearish ones can now become order blocks. If on the other hand this bullish candle wasn't here, then in order for a order block to be formed, it would have to run all the way up here above this high for the order block to form. So that's why it's kind of significant that we have like candles like this in between. So because we have this, what I'm going to look for now is an order block to form. And I do want to see it tap into here, but we already got this order block. So same thing as last time, right? We wanted to see it run into this lower fair value gap, but we didn't. And now price is running up again. So what we want to see now is a fair value gap form in between this candle high and the low of the next candle that's about to open. And if it does, then this order block becomes a high probability order block. As long as you're not gambling and trying to catch the high, like it's not too difficult or different to trade this. Remember, we want to see this candle close, a fair value gap to form in between this candle high and the next candle low. That's what a fair value gap is. It's just the little gap in between. As long as no wick covers it, we have a new high probability order block. Okay, we're about to have a next macro. I'm going to watch this macro to see if we actually end up digging into this low and into this next fair value gap. So this is going to be our target for the macro. DOL, which means draw on liquidity. So under normal circumstances, right here, this fair value gap, this order block would have been an entry, right? But because of the fact that the macro is approaching, macro characteristics are typically sweeping liquidity. So what we want to see is this liquidity swept into this fair value gap right below, and then we want to see a move on highs again. So we'll see what happens as soon as this macro opens. We might get a little fair value gap that forms right here, as long as this candle doesn't pull up any higher, and that would be our first bearish fair value gap. Things like that are pretty significant. Right here, we just got our first bearish fair value gap. Look at this. Filled up perfectly, macro's about to open, and this might be the very supporting factor for it to run just a little bit lower right here. I'm going to get rid of this bullish fair value gap here now. Okay, we just got an IFEG, and once this candle closes, we will have a new fair value gap. I mean, even though the macro kind of is about to start, this could be another setup that it just uses to run from, right? Because like I said, this is the first bearish fair value gap, and this is the first inversion fair value gap that we just got. So it's a 1 minute IFEG. This is a regular IFEG. IFEG, FEG. I do have to be somewhere at 7, but I hope you guys learned something from this little encounter of price just being extremely bullish and running on highs. Like, it still respects price action. You just have to know how to adapt and trade it in a different environment. In fact, this environment makes it even easier for you to execute. It's even easier for you to get profitable trading in a condition like this, because there's not much thinking involved. Every bullish fair value gap will tend to get respected, and if these two don't get respected, all it will really do is pull down to a discounted one below a low, create a new order block, a new fair value gap, and then run on highs. It's even easier to trade in a market like this than it is in a both-sided market, because when it comes to two-sided markets, you have to know about power of 3. You have to know about where the daily candle is likely to close. In this case, you know that the daily candles are likely to close bullish just because previous daily candles were closing bullish. Look at the last 1, 2, 3, 4, 5, 6 daily candles. We had 6 bullish daily candles just within the last 2 weeks. Why would it start going bearish now? There's no reason for it to do. It might continue with bullishness until, who knows, December, right? Maybe next year. In these conditions, it's even easier to execute. I'm going to check if anyone sent any questions, and then I'm going to end the stream. Alright, thanks for hopping in today, guys. Just wanted to get back into the flow of streaming so that I could do it a little more easy